Hey guys, it's Sasha. 2 days ago, the US Federal Reserve increased the federal funds rate by 0.25% to a target rate of 4.75 to 5%. And this morning, Deutsche Bank is the latest bank staring at a potential collapse, looking to join Credit Suisse in the scrap heap as their credit default swap spiked and the share price tanked in pre-market trading. Now, I am going to share exactly what I think about the Federal Reserve's increase and the implications, but recent changes to YouTube guidelines say that excessive cuss words at the beginning of a video are a big no-no. So I'm going to ease into it gently. Now, I recently gave Jerome Powell and the rest of the FOMC circus the benefit of the doubt. But this week, they have excelled themselves at making dumb decisions for dumb reasons. In the days before the rate hike announcement, 3 US banks collapsed. First it was Silvergate, but nobody really cared because, it's crypto. Then it was Silicon Valley Bank, and suddenly everybody cared because the startups in Silicon Valley were all using it. And then it was Signature Bank a few days after that. And then a few days after that, Credit Suisse collapsed. Now, this one was a long time coming, not quite the same sort of issues, but while everybody else is collapsing too, why not join the party? So the Fed is sitting there with their pants around their ankles because remember, as well as being utterly shit at managing the economy, the Fed is also meant to be responsible for regulating the banks. And instead of regulating the banks, they deregulated the banks. When Jerome Powell was first appointed, the small banks were allowed a lot more freedom, which is precisely part of the reason why 3 small banks have now collapsed. And the Fed has failed at giving any fucks whatsoever about ensuring that the banks that they regulate actually have well-structured balance sheets. But not only that, the banks that the Fed regulates got fucked precisely because the Fed increased rates at the fastest rate in history. And do you know the reason why they had to do that? Well, the reason is that back in 2021, when inflation was exploding, Jerome Powell and Janet Yellen were busy saying bullshit about inflation being transitory, going away all by itself for the first time in history.
And an episode of one-time price increases as the economy reopens is not the same thing as, and is not likely to lead to, persistently higher year-over-year inflation into the future, inflation at levels that are not consistent with our goal of 2% inflation. We know that the base effects will disappear in a few months.
Now, back in 2020, after COVID arrived, money flooded into the economy. And yes, it was the Fed that printed that money in the first place. You can see the chain reaction here, right? And in 2021, after the money tap was left on to the max, inflation started going up. It was going up all the way through 2021. From 1.4% in January to 6.8% in November. Every single indicator at the time was saying that inflation is running away, it was dangerous. I was sitting right here making videos saying that the Fed has to start increasing rates or the situation will get ugly because it was obvious. And what did Jerome Powell do? Absolutely fucking nothing. In the December FOMC meeting in 2021, that came 2 days after the November inflation data was published at 6.8%. Remember, 6.8% is a lot higher than the 6% it is today. Every single inflation indicator at the time was pointing to inflation increasing in the next 6 to 12 months. And yet, the Fed did nothing. The rate remained at basically 0%. And for some strange reason this week, when inflation has dropped to 6%, it's on the way down, every indicator is saying that inflation will continue dropping in the next 6 to 12 months, the Fed rate is already at 4.75%. For some fucked up reason, the Fed felt that they had to increase rates this week. One big problem with the Federal Reserve is that they are meant to be an impartial organization. The whole point is that the Fed is apolitical. They are meant to make decisions based on data, based on knowledge, based on information, and that only. But that, in reality, is not the case. Instead of, looking at economic factors, trying to actually understand what the fuck is going on, Jerome Powell and the rest of the FOMC members are busy traveling around the country, giving endless speeches, attending fancy dinners, wearing black tie. And because the Fed was so late to react to inflation in the first place, the difference between the Fed rate and inflation dipped to the lowest ever level, going below -8% in March 2022 before the first rate hike happened. happened way too late. And the reason for the collapse of Silicon Valley Bank is because they had to increase rates so fast afterwards. If they started increasing when inflation was first going up, the problem would be nowhere near as bad because a large portion of the deposits flowing into Silicon Valley Bank at the time would have been converted into bonds at higher rates and into mortgage-based securities at higher rates. If the Fed actually did their job, instead of playing politics, we wouldn't have had this problem. We would definitely not have had this problem to this extent. And now we're seeing the exact opposite happen. Oil is now down at $73 as I'm recording this video, roughly 35% lower than at this point last year. Natural gas is at $2.20, roughly 73% lower than at this point last year. That's right, the cost of natural gas, the commodity, is now down 73% compared to 12 months ago. This means that energy costs are going to start coming down in the next few months as these commodity prices filter through to consumers. But as per usual, energy prices go up immediately when commodity prices spike, but the corrupt fucks then take months to bring them back down when the price collapses, and the government is in cahoots and does absolutely nothing to stop the cartel. Anyway, energy has a weight of about 7.1% in the total consumer price index, but energy is also indirectly part of the cost of most other components as well. Food has a big energy component, transportation costs are obviously heavily based on energy, etc., etc. So in total, energy's contribution to inflation probably sits at somewhere roughly around 15%. And while inflation is currently at 6%, the energy component, 15% of that total, are sitting at minus 35% and minus 73% when you're looking at the underlying cost of the commodities. So in the coming months, energy is going to start pushing inflation down a lot. Food inflation has finally dropped below 10% in the CPI in February, and the producers index has food final demand down 2.2% in February, which indicates that food prices are now moderating as well. Shelter will keep increasing in the CPI because it lags real world rent and house price increases, but shelter is now sitting above the actual increases, so there is a long-term downward pressure starting now on that as well. And Jerome Powell, in his speech 2 days ago, said the Fed is aware that shelter is on the way down, but will take some time to filter through. So inflation is falling. Every single metric you look at indicates that inflation will continue falling. Employment is strong, and yet the Fed still increased the rate by 0.25%. And the only fucking reason that they did it is because they are trying to save face. Is because those morons went round giving speeches 2 weeks before that rate increase saying that they will increase it. And instead of looking at the data, reconsidering their assumptions, rethinking what they said, they went through and increased it anyway despite 3 US banks collapsing in those 2 weeks. In the speech on Wednesday, Jerome Powell said that there is no chance that there will be rate reductions this year.
Participants don't see rate cuts this year. They just don't.
And if you look at the dot plot from the meeting, 17 out of 18 members of the FOMC think that the rate has to increase more this year. One guy thinks it has to stay at this level, and nobody, not one of the 18 people in that room, thinks that it should go down. And everybody is listening to all of this shit, Jerome Powell's verbal diarrhea, as though it's some kind of gospel. In that December 2021 Fed meeting, when inflation was much higher than it is today, and the Fed rate was at 0, almost all of the members of the committee, the same exact people, thought that the rate would not have to go above 1% in 2022 and stay below 2% in 2023. What does that tell you about their level of understanding and the ability of politics to maybe influence the shit that comes out of their mouth? And yeah, these are the guys in charge of the various US Federal Reserve banks. They have big CVs and they're all fancy and really, really smart people. I'm just some schmuck on YouTube. But just because they have a fancy job title and earn a lot of money does not mean that they understand what the fuck they are doing. All the data is pointing to the exact opposite. And you can see from the data that they completely missed inflation, even though managing inflation is literally 50% of their job description. And right now, it's the opposite. The projection is that rates will now have to keep on going up while employment is strong, inflation is coming down. All the data is pointing, but nobody seems to be looking at the data. Now the rate is sitting at 5%. What happens if inflation dips below 5% in May or June? What happens if inflation is down at 3 or 4% at some point in Q3? Is the Fed going to keep on increasing rates just because they said so? Because increasing rates is now becoming the problem for the economy. Instead of rates being the instrument that can help the economy, instead of it being the tool that the Fed can use to adjust things and maybe try to help things, that is now becoming the instrument that is fucking the economy instead. Each increase in the rate is making borrowing more expensive. It means people paying variable rates on debt are finding it harder to make ends meet. Mortgages are becoming much more expensive. Many of the early stage companies sit on corporate debt that has to be continuously refinanced, and instead of investing in growth, they are now spending that cash on paying interest. Instead of stimulating the economy, instead of getting out of this financial crisis, instead of getting out of GDP being slow, instead of that, they're just paying more interest to the banks for no reason at all other than Jerome Powell's political ambitions. The last time we had banks collapsing, low confidence in the economy, and the stock market taking a beating at the same time was in 2008. In July 2008, inflation had increased to 5.6%. In March 2008, just a little bit before that, Bear Stearns collapsed and the banking sector became jittery. Then just 5 days before that August Fed meeting, Freddie Mac and Fannie Mae collapsed, and the Congress passed the Housing and Economic Recovery Act to effectively take them over and pump money into them. So just before that meeting, financial institutions were collapsing right, left, and center. The economy was in the shitter, and the FOMC statement in August 2008 had this paragraph in the middle. Inflation has been high, spurred by the earlier increases in the prices of energy and some other commodities, and some indicators of inflation expectations have been elevated. The committee expects inflation to moderate later this year and next year, but the inflation outlook remains highly uncertain. And you know what the Fed rate was at the time? It was 2%. And in that meeting, the Fed chose not to increase it. And just 4 weeks later, Lehman Brothers collapsed at the beginning of September, and the whole economy came crashing down anyway. Ben Bernanke was the chair of the Fed at the time, and on the 22nd of August 2008, 2 weeks after that Fed meeting and 2 weeks before the Lehman Brothers collapsed, he gave a speech. And in that speech, he said, "In view of the weakening outlook and the downside risks to growth, the Federal Open Market Committee has maintained a relatively low target for the federal funds rate despite an increase in inflationary pressures." Then a few sentences later, he said, "The second element of our response has been to offer liquidity support to the financial markets through a variety of collateralized lending programs. I have discussed these lending facilities and their rationale in some detail on other occasions. Briefly, these programs are intended to mitigate what have been at times very severe strains in short-term funding markets, and by providing an additional source of financing to allow banks and other financial institutions to deleverage in a more orderly manner." Sounds eerily familiar, right? Well, the situation in 2008 was very different, and the banking sector did at the time have a major systemic problem, which is itself very different to the situation we have today. But in the Q&A this week, after Jerome Powell's speech, he was asked why the Fed doesn't work with the government, for example, in using fiscal policy instead of just bluntly raising rates where perhaps there is no good reason to do so.
Do you need help from the fiscal side to get inflation down faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that we take fiscal policy as it comes to our front door.
So the US financial system is at a crisis point. Multiple banks have just collapsed. The Fed is having to print hundreds of billions of dollars to stop more banks collapsing. But the Fed can't pick up the fucking phone to the government and work this thing out together. Because, it's not our responsibility, division of responsibilities. They do their bit, we do our bit. What the actual fuck? Why is the Fed acting like a dumbass middle manager in a company that doesn't want to do anything outside their job description because they are just too bone idle? We are now in a situation where the rate increase itself is likely to cause slower growth, is likely to potentially screw the economy, which is incredibly frustrating when you can clearly see that there is no sound basis for the increase in the first place. So suppose Deutsche Bank collapses in the next few days, or maybe it'll be First Republic Bank or somebody else. And then Let's say the combination of confidence evaporating, the cost of debt skyrocketing caused a much worse recession than we would otherwise have had. Maybe we wouldn't even be having this conversation. The Fed is going to sit there giving speeches saying how sad it is that the economy is not doing well and who could possibly have predicted this shit, despite being a big fuck off reason, the Fed being a big reason why the economy is not doing well in the first place. But hey, I guess saving face and increasing rates to justify shit that you said before, regardless of what the data is saying, is more important than fucking the economy, fucking people's livelihoods, and fucking people's jobs. I look forward to hearing Jerome Powell be very surprised when inflation drops completely unexpectedly. Nobody could possibly predict this, and the Fed is once again left standing there holding their private parts in their hands because they completely over-egged it and completely missed it again.